Alrighty.
I just
Hey,
looked
Melissa.
I just looked at
Hi
them like,
there.
fuck, that's like $1,000.
That's it, man. Let me just call. There's one member that wants to come. Nah, he's busy. All right. I'll wait for one more, two more. I think people are always late.
Yeah, does anyone watch UFC?
Dude, of course. That's my favorite.
How fucking good was Volk this weekend?
Yeah, I know. What did you think of Volkanovski's the pound for pound number one? He's the best.
Dude, he's the best fighter in the world.
100%. Imagine fighting that guy down in Wollongong in a pub, dude. You'd be dead.
My brother-in-law used to train with him.
Oh my.
He just doesn't fucking get hit.
I know. He's one of my favorites. All right, let's get into the good stuff, guys. I won't mute you all unless you got background music. Just mute yourself, but we'll just keep it open. I guess, look, the group is doing really, really well with the results. Like, we've seen a lot of people get a lot better in the past few weeks. There's obviously still a few people that are quiet. So me and Dan are going to ramp up the next week. So I'm off to Greece on the 14th of July. I'm only there for 8 days. It's just 8 days of partying. So I'll be back. But the main goal here tonight is talking to you guys about some of the mistakes that I'm seeing. Like, there's only a few mistakes. And I want to talk to you guys about the technical analysis side, because it only really gets to a point where it can't get any better, right? So, like, for example, Nathan, your analysis is as good as mine. Do you know what I mean? Like, it's at a point where, like, if you keep trying to push the analysis side of your trading, there's not much you can juice out of it. You know what I mean? Like, there's only so much technical analysis can do. Yeah. It's now about, like, you know, I'm not going to go into this trade. You know what I mean? That's like where, that's like the point where you can push to the next level, when it's like, I don't want to take that trade. It's not my rules. So it's not about getting, like, really, really amazing at technical analysis, guys, because the tools that you have work. It's now about, like, the small mistakes, getting rid of those. You know what I mean? So, you know, I compare it to, for example, owning a business. You're doing $2 million a year. Like, you know, the 1%ers are really going to add up, you know, good reviews and stuff like that. Not really going out there and fucking jamming it down people's throats. So we're going to talk a little bit about that. I'll share my screen. So I've just made this for tonight, and I've got another one to show you guys. So let me just get rid of this. So the problem number one I'm saying is the counter trend trading. I know 100% people are still going long in this market. I have done it too on the shorter term timeframes. But what I'm seeing is like, we know we're in the biggest bear market ever right now. And we're still seeing some longs come into the results group. And even though you're making, you know, maybe 30-40% profit on your longs, you're going to regret it later when, for example, the bull market comes. And in a bull market, guys, especially a crypto bull market, like, a few of the guys who have been in crypto will know, if you're trying to take shorts in that market, you're going to get stopped out every single time. So I want to get you guys into the motion of, like, if the market's bearish, just let price come to you to take shorts. We're not looking for longs. Because you're going to be over trading. And I know it's one of those mindset things where you're like, I always want to be in a trade. We all want to be in a trade all the time, because you're making money or you're losing money and it's fun. You know what I mean? So I guess it just has to be to the point where you're like, I'm just cutting out one side of the market. Because, for example, if you only look for shorts, you're going to be able to understand if your strategy works better. Because if you mix up shorts and longs in a bear market, and let's just say your win rate 60%, it could probably push to 70-80% if you only went short. So a lot of the losses that you guys will see if you go through some of your trades would probably be counter trend trading. So really watch out for that. It's something that I do sometimes as well. And I'm going to show you a scenario now on the screen where it's okay to go for a long. So, for example, on Bitcoin, like, remember how I was calling that 8-hour order block down here for a long time? So we've got this. That's an area that you can take along, because if we look at the range, right, we'll just say that's the range high. and that's the range low. We're at the bottom 70% of the entire range. So you can start looking for longs, especially if you've got a setup like this. But now, like, it looks like the market wants to break out, but you got to remember the market's completely random. That's how you have to think of it. We can't be looking for longs here right now. Even though like, it's like, oh my God, I want to do it. I'm telling you now, like, you cannot be looking for longs because we're in the 50% of the bearish range. Like we're actually above the 50%. So we're in that 60% retracement level. So, and if we pull a fib from this high to where the low was made, we're in like an optimal trade entry to go short. You know what I mean?
Yeah.
So it's really one of those things, guys, where I know you really want to start looking for longs. It's fun taking longs, but just stick with the shorts. And another scenario where you could go long is, for example, if I pull this 8-hour order block, right? And then if we go to the 4-hour, let's just say you had this break of structure here. So with this candle that came up, you could take this 8-hour order block. So 2 4-hour candles. So you could still take a long off these 2 candles because we're so close to the overall demand.
Yeah, see, yeah.
But once we come up into this zone here, we're looking for sells. Okay. So I'm seeing a lot of you still like sharing some like potential longs. And it's still that retail mindset of like, you know, I want to anticipate a breakout. But as we can see up here, guys, like we're really in a fractal nature of price at the moment where look how similar price action is. Like, look, so we've got this sort of rounded top. Okay. You've got price dropping, comes back up, drops again. It's the exact same thing that's happening because the market is controlled by smart money. And if you've seen order blocks work, you probably agree by now. So we're in a similar thing here. If we have a look at what happened here when people were going long, right? They're anticipating that breakout. They're bidding these levels, and then the market just dumps. It crashes. So I guess this session's more about just me giving you guys some some cold hard truths because I fall for it sometimes as well. Sometimes I can be like, I want to look for longs, but you can only look for longs at the bottom of ranges. Okay. Like for example, taking it up, for example, here, taking it up, but not when we're heading into these levels. Okay. So don't worry what you see on Twitter. Don't worry what you see on YouTube with people saying, oh my God, we're at the bottom. I really don't think we're at the bottom here. So if you're going to be trading and you really want to start getting your win rate better, just look for short. Okay. So that's problem number 1. Someone's mic's just going nuts. So if you've got background noise, guys, just mute that. Second, okay. This was the reason for problem number 1. It's not letting the price come to you, and it's just pure impatience, which I've just sort of spoken about. Problem number 2, there's Chris and Zane who do this a lot. They're good traders. Their TA is really good, but they're entering on like a 4-hour bias, right? And then they're monitoring it on a 5-minute. Okay. And like, that's going to scare the shit out of anyone because, for example, this entry on the 8-hour order block that I showed you guys before, it's a good entry. And on the 4-hour, it looks amazing. But look how different the price action looks on the 5-minute. Like you're going to start looking at breaks in structure. You're going to start wanting to take short. Even though, is my mic still working?
Yeah.
Oh,
Not
You know,
now.
like,
No, it's doing what it's doing yesterday.
It's gone.
is it back?
Yeah, there you go.
Yeah. Sorry, guys. So on the 4-hour long here, for example, let's just say you entered that and then you go to the 5-minute because you're always on your phone looking at the trade. Trust me, guys. I know you guys do it. You're always looking at the screen. You're always looking at the price. If you're on a 5-minute time frame, it's going to freak the shit out of you. You're going to start thinking it's coming all the way back down. But if you look at the 4-hour, it's literally still on the level that you entered. Okay. So this can really cause you to exit those winners very early. And that's one of the problems. It's like, we want to only get rid of our losers early. So that's why yesterday, the trade that a lot of our guys were in, remember that short we took, Nath?
Yeah.
Even though we got broke even on that, I'm still very happy with the trade because market shifted on us. We can't control that. We didn't know that was going to happen, but it was a good setup. And if you were on the 5-minute, you know what I mean? You would have freaked yourself out really early because it did come up a few times. So, you know, it's one of those things where it's like, we want to cut the losers short, but with the winners, if you're in profit, don't freak out on the 5 minute if you start getting a lower high on the 5 minute. And I'm telling you, this lesson tonight, you guys will go back to your computers and be like, yeah, that trade there, I lost it because of that. This stuff here is crucial. And if I've been through the results today and I actually looked at all the results, the short profits are far outweighing any of the longs. Like you got 200%, 100% from me, 162, 140. And then you look at the longs, they're mostly scalps, like 20, 30%. So just remember, like in the market we're in now, stay short until market structure shifts. Okay. And what are we looking for to start looking for longs? Essentially, guys, we're going to have to break that. Okay. Because if we look at the daily time frame, these highs here and this order block here, okay, that's really still an area where I would go short. So even if we started coming up like this, breaking these highs and making bullish structure, we still potentially get something like that. Okay. So it's one of those things where until we're above price like this, and we really start hunting higher prices, then yeah, we can start looking for longs, but we're not worrying about price action here. Okay. Until we break this high. So I hope that helps. I'll go through the other PDF that I've got for you guys, which is the rule-based PDF that I made. Now, there might be a few people who haven't looked at smart money yet, and there's going to be people who love it, and you're probably sick of learning the basics. But the reason I keep getting better as a trader is because I teach the basics all the fucking time. So all I'm hearing is the basics. You know what I mean? And it's made me a better trader teaching you guys because I have to worry about what I say and make sure that it's correct. Okay, so if you've ever got a chance to teach a friend or someone in the group, do it, because if you teach people, you're going to get heaps better. All right. I'm constantly focusing on the basics because that's what you guys need help with. And it makes me a better trader. So don't worry about the basics. They're the best. Terminology you might not know, obviously HTF, higher time frame, lower time frame, market structure, AOI, area of interest, supply is an area where we're looking to take shorts, or an area where supply outweighed demand. Flip side, demand is obviously a buying area of interest. A bearish order block is a refined supply level that is bearish. Okay, so it's that last candle before the break occurs. Okay. Similar thing with the bullish. Okay, it's an order block that is in demand, but it's the refined candle. Okay, so the last down candle before the break in structure. BOS, BIS, break in structure, optimal trade entry, which is our fib levels. Okay, so when someone says OTE, it means it's in like a 61 or 70% retracement. Very important. And then you got your stop loss and risk to reward ratio. The reason I want to put this here is because that's all you need to know to make a profitable trade with smart money, if you know all of this stuff. Okay. Now, I won't bother reading all this stuff. Essentially, guys, the rule-based smart money thing is like, there's a 5-step process that I've been using, and I'm trying to dial it in to make it a bit easier for like beginners to follow. But it fucking works. It works really well. Okay. I won't bother reading all this. Essentially, it's just rules you have to follow and like a step-by-step way to do it. This is also something I want to talk about is the time frames. And it goes back to that, you know, entering a 4-hour trade, but monitoring on the 5 minute. You can't do that. It's way too many time frame fractals below where you've entered. And it's gonna give you too much data. And when someone has too much data, you're gonna make a mistake. Okay. So if you're using a 4-hour time frame, right, I want you guys monitoring on a 1-hour time frame. If you're entering on a 1-hour time frame, I want you monitoring on a 15-minute time frame, not lower. So if you're entering on a 1-hour time frame, don't jump on the 1 minute because you're going to start counter trend trading again. This has really helped me. Even I only came up with this like 2-3 weeks ago, and I was like, "Fuck, that makes a lot of sense." And I've been using it as of late, and it's working very well. So try this out. Let me know how you guys go on with it. But I saw a lot of people in the group doing, you know, high time frame and then just trying to monitor it on the 5, and that's going to freak you guys out. All right. So rule number 1, the higher time frame structure. We've spoken about this. You guys understand it. We know we're in a downtrend on the higher time frames, right? So what does that mean? We're still only looking for shorts. We're looking for areas of supply. Even though I showed you guys this 8-hour level on Bitcoin, where was it? Okay. This 8-hour level here, The reason I like this level is because if we go to the weekly time frame, we're still inside like this whole area. Does that sort of make sense? So like I wouldn't be looking for an 8-hour demand block unless it was in the path. Yeah.
Yeah.
So that I hope that makes a lot of sense. Like I wouldn't be looking for a long unless it was on a higher time frame. So the weekly obviously outweighs our 8-hour, which is why we can start looking for longs on that order block. Okay. If we go back to this, so remember the higher time frame structure is usually the direction you're taking your trade. Okay. Now, rule number 2, as soon as you go into the chart, depending on what time frame you're on, we're going to be looking for a break of structure. That's the first thing you want to look for when you're looking for an order block. Okay. Because the break in structure is what creates that supply or demand area. Okay. So you want to find the break in structure. As we can see here, structure can either be, in my opinion, with smart money, people have different theories, but structure for me is either a level of support where people are buying. Okay. So people are bidding on this level. That's an area of structure, in my opinion, or predominantly the previous time that the market swung low. Okay. So we can see here, that's the last time the market came down before moving up, and then it broke the low and the support level. So that confluence there really gives me confidence when I'm trading. If you can break a low and a support structure, that's what you want to see, right? We can see here that people would have waited for that retest. Okay, that's cool. They still made money there, but there's an order block here that I'm really looking at, and it's that candle right there. Okay, so you can see here when the price swung low and came up. Yo, hold up. So we can see here that when price swung up, you got to think of the mindset of what's happening when that candle's green. That means that people are buying, okay, and obviously going long, looking for a breakout. So what does that cause? It causes liquidity, right? Because there's going to be orders stacked at that level, okay? And once we mark that out, we need to find the next candle. So I pull that across, rectangle, whatever you want to do. You can use lines. We want to find where price swung and trapped traders. And I've been saying that recently is like, the best order blocks is where the most people on the opposite side have lost money. Okay. Because that's the goal of smart money, is to make people lose money. So when they return to the level, those traders either flip their bias or their stop losses get hit. Okay. So I've pulled that candle to the right. That's the area of interest. And a lot of traders won't take that because they're like, oh, there's a resistance level there now. But liquidity is more important than support and resistance. Okay, remember that. Wherever orders lay, price tends to go. So with your support and resistance, don't hold too much weight if you've got a massive order block that has liquidity. Okay, and then we can see that's our entry target at 50% inside the zone. Okay, our stop loss has to be above that high there, because the thesis is if it breaks that high, we have a shift to the bullish side, and we're going to be wrong on the trade anyway. So you really want to be getting in as close as to where you're going to be wrong on the trade. And that's what's so amazing about smart money concepts, is because we're selling and buying always at massive discounts. Okay. I won't bother reading all this, but that's essentially the entry criteria. And then the target criteria would either be the next order block or where the market started retracing. So we can see here that the market came down, it built this base. Okay. So this is an area of now, support or demand. That's really where we want to target. We can't target any lower than that because we don't know where price is going to go. And that's really what I'm trying to get you guys into. Like, stop trying to predict where price is going. Just get the best entry you can and use past data to find those take profits. Okay. That's what the thing with retail traders, they're always trying to predict, like, oh, BTC is going to 150K. Like, when you try to predict where things are going, it really doesn't make any sense. Okay. We have to use the data in front of us and not just make wild predictions. Okay. So that's the reason why I would take profit here, is because the base is being built and then we want price to come up. Okay. So what we see is that the base is built, price comes into the entry. Okay, we're short here with a limit order. You don't want to market execute this. You really just want to bang the level, because if you're wrong anyway. Okay, you're not going to win every single trade. The risk to reward is 5-1. We really want a minimum of 3-1 if we're going to trade this system. Okay, and then we can see here that the target was perfect because we targeted the previous base and price comes into it and starts coming up again. So if we targeted any lower, it would have put you in a really bad mindset because you would have been like, fuck, what do I do? Do I close? Do I add more size? This happens all the time. So stop trying to predict what levels price will go to and just use the data. Okay. If you miss the entry on the higher time frame, I might have to show you guys this on the live chart. But for example, that was our 4-hour block that we used here. Okay. If you miss the entry, you can go to that 1 hour time frame, which is 4 time frames down, and you can find the 1 hour order block. So we can see here, price went up, broke structure. So we can pull that up candle. Okay. And we can do the same entry criteria, 50%. And the reason this is such a strong trade, in my opinion, is because we're using the higher time frame bias and the lower time frame bias, and they're working in sync. And what you can see is you just target the same level. You target the higher time frame base, which was down here. Okay, this is probably the highest win rate setup. If you're using, and Dan does it a lot, and I've seen a lot of people try to use it. It's really good. If you get a higher time frame order block, and then you get the shift on the smaller time frame, that's the goal. That's the golden trade. That's usually a very high win rate. Okay. And then obviously your Fibonacci's. Okay. I use them a lot with order blocks, but I tend to not want to enter the order block if it's more than 80% retracement. Okay. So we can see here that on this one, Bitcoin 4-hour time frame, we can see that we had the up candle. Okay. And you got to think of the retail trader again. They're going to be buying on this support level. They're bidding prices. They think that the support's going to, boost prices higher. So we've got a lot of trapped longs at this level. And when someone goes long, where do they place their stop loss? Okay. So price hunts the stop losses, breaks that level. Those retail traders are stopped out. They return to the origin, okay, which is inside the 70% retracement. And then they come down. If you don't have any data to your left, like for example, on this trade where we had that base to target, use your fib targets. You've got the minus 27, you've got the minus 61.8, and you've got the minus 100%. All right. You guys are probably gonna have to watch this video again because I'm not going to do much on the charts. I'll show you a little bit, but this PDF here has a lot of gold in it. So make sure you go over it. We can see here, this is another really good one, right? So wait, what's this? Is this, okay, this is a second entry off the same one. So we can see, oh, Sammy's here. We can see that our previous entry, was this block, okay? This is our second entry. So you can enter an order block that's already been an order block. Do you know what I mean? So there's order blocks within order blocks. So this order block got hit, came down. Now we can pull the most recent up candle before the structure broke again. And we can see we get another entry on that. And we just target the same lows. We're not going to be targeting any lower than that. So just remember, if we're higher time frame structure, we're only looking for shorts. I guarantee if you guys try that, sorry, I won't say guarantee, but I guarantee if you guys give it a good go and only trade short over the next few weeks until we obviously get into a bullish market, could be a year away, could be 3 months, could be tomorrow. I don't know when it is. I'm not going to try to predict, but if you just stick to the short side, you will see your win rate increase. All right. Are there any questions on anything I just spoke about?
Nicky, can you hear me, mate?
Yeah, bro.
Hey, man, how are you?
Good, mate.
This is gold, man. I love it. Hey, probably a real dumb question, but looking at this chart you got in here, this is a 4-hour Bitcoin chart, yeah?
Yep.
So you're saying on that first swing high there where the order block is, yeah, right there?
Yeah.
And the next time it comes up and touches that where you got the dollar sign over to the right?
Yeah.
On a 4-hour chart, I can't add it up, but is that a week? Is that 2 weeks somewhere there?
I don't reckon it'll be a week. It'd probably be 4 hour. It's probably like 3 or 4 days, maybe 5 days.
Okay, so again, a real dumb newbie question, but are we waiting sometimes 3 or 4 days for these trades to set up? Is that what we're doing?
But you got to remember, man, there's like you can trade like 15 crypto pairs.
Yeah, that's
so
what I thought.
So that's the thing I'm trying to say is like, if you're trading one pair, obviously it gets annoying because you're going to have to wait for price to come to you. But I'm telling you guys, the best setups you're going to get is when you're waiting.
Yep.
Yeah, for sure. So like, it's very spot on. If you're on a smaller time frame, there's obviously order blocks in smaller time frames. I'm just showing on the 4 hour, you're going to have to wait a few days for good setups.
Thanks, man. That's great.
Good question, man. Good question. Because
thank you.
Think about it. 2 weeks ago, I sent out that 8 hour order block, right?
Yep.
and it only just came into it 3 days ago.
Yep.
But Zane took the trade with 4 BTC as margin, and the guy made like 18K. So like, because it's such a high probability setup, you're happy to let price come to you. You know what I mean? Yep. And there's still trades all week, like on the smaller time frames. I'm just saying, when you get the bigger time frame, it always comes back.
And you're playing 3 or 4 different pairs. You've got Solana and you've got Cardano and you've got the others you're playing as well. So you've got
exactly.
Yeah, okay.
Exactly. And you just set alerts and you just let price come to you. If you guys start doing that, your win rate's going to be massive. And the reason it's going to be massive is because you just got to think, we're selling and buying such discounted prices. Like, you know, everyone's selling here. Everyone's selling these levels because they just want to catch the next big drop. We're all the way up here waiting for price to come to us. Like, we get massive risk to reward. They're getting 1-to-1s. They're getting stopped out all the time. So that's what you got to think. Like, whatever the average Joe that's punting on crypto is doing, you want to fucking be completely opposite. And that's the shit you need to hear, like, honestly, because heaps of people lose money trading. So I'm just trying to get you guys into the right mindset that, like, you're not the average Joe. Even though we're all retail traders, you can't think like one.
Perfect, man. Thank you.
All good. Any other questions, guys?
Hey, Nick, I got a question.
Sure.
How you going, Nick?
Yeah, good, man.
Okay. So you were mentioning that I mean, one way of looking at it is waiting for the price to come back to origin.
Yeah.
Some trades that I take is like, I take it from the from the supply zone.
Yeah.
There's a good demand block at the bottom. So before it reaches, retraces back to the origin, I take the short from the supply zone to the demand. Yeah.
That's good.
So is that also like also a recommended way of?
100%. Like, in the end of the day, like, remember yesterday we were in that short, Gerard?
Yeah.
And then I said to you guys, I think we might get a retrace here off that 5-minute order block.
Right.
And that completely shifted structure on us.
Hmm.
So see what I mean? Like, I'm still looking at smaller time frame order blocks. And like, I sort of knew yesterday that we were in a really good trade, but remember what I said to you guys, I reckon we might get some short term upside.
Yep.
So it's one of those things where it's like, you can either take your profit off the table there and take your money off the table and make the profit,
right,
or you stick with the fucking trade and you just break even it. You know what I mean?
Yeah.
And you did well yesterday. You took 50% profit.
Yeah.
So you did nothing wrong there. There's never anything wrong with taking profit, but try not to do it early all the time, because when you do get a massive winner, like, have you guys ever done a setup? Okay, you look back on the chart 2 months later and you're like, dude, if I just held that, I'd be fucking rich.
Oh, I'm always too early.
Yeah.
Yeah. So like,
I'm always too early.
Mate, I've looked at trades where I was looking at Bitcoin shorts at like 55,000. And I was just like, if I held that, you know what I mean? On the first lower high, I was looking at order blocks. So it's one of those things where it's like, it's so hard not to take, not take them too early. But that's the game. That's the goal. It's like, let the winners run and just cut the losers short. Gerard, you're doing well, bro. Don't worry. You're doing well. I know you're doing well.
So, Nick, I've got a question. That order block setup you've got on screen now, that 4 hour, how long does that stay valid for, that order block? When does it become valid?
When that becomes valid, that's valid as soon as the structure's broken.
Yeah.
So price comes up. Okay, we've got people bidding that level. We break structure with volume. So you can see like the footprint of smart money, right? We can see that this little uptrend here, that's retail volume. And then look at the volume on the downside. Like, I don't know who smart money is. I don't know who the fuck they are, but I'm guarantee you, if you trade order blocks, you will know how powerful they are. You will know it's like there's a conspiracy. It's real 100%. So once the structure breaks, that's valid. Okay. When that becomes invalid, I wouldn't use that order block anymore once I've already got the entry.
Right. Okay, cool. That's the answer. Cool.
Because the thesis of it is that the orders that were sitting there and like the work that they needed to do at that level has already been done. So they don't want to take it back there.
Yeah.
Unless it's a 1 hour time frame, like I showed you guys on this one, you can get price, chill at a level for a little bit. Where's that 1 hour trade that I got the other day? It was a fucking beauty, the double top. Let's go 4 hour. Oh my God, I always lock my fucking screen. Sorry, guys.
Swearing, Nick.
Yo. So
Double top was on the 5th.
yeah. So it was this level here. Let's go replay. Okay, it was this level here. Okay.
Yeah.
Right. Price remains. So like a lot of people will, they might freak out if price comes off it. Right. If price comes off it, they might think, okay, it's invalid now. I can't keep my order in if it comes back. But remember, we've got to have an invalidation point before we get in. The invalidation point for me was above this high. Okay. Not this one, because that's a little bit of a blow off wick. If that breaks, we're fucked anyway. So when price remains at that double top there, that's fine for me. But once it drops like dramatically like that, and we get that smart money, when we get that smart money volume, I don't want to see this used again. Does that sort of make sense?
Yes, definitely. Yeah.
So once it remains in there and it bases, that's what supply does. Remember, rally, base, drop. That's supply. So that for me is like a really good sign. But when you get price come down and back up, there could be another entry, but once it breaks, that's done. All right.
Okay.
So remember,
that's right.
Liquidity is done here now. Once that trade's been used.
Yeah, that's why I need to learn to hold on longer. I always bring my stop losses down once I'm winning, and then I get tapped out too early.
And then it goes to where you wanted it to go. Yeah, no, it's
of course, every time. So instead of winning, a big win, I'm taking short. It's like I'm scalp trading instead of doing the big swing trading.
Nah, for sure. So like one of the things is that I want you guys to get into, and I say it all the time, but I think it might get lost in translation. It's like, remember yesterday on that trade that we were live on together, I sort of said, I've already in my mind, the trade's already a losing trade. Every time I enter a trade, I've already taken that money that I'm risking out of my account in my head. Every trade you enter, you have to accept risk before you think of profit. If you guys switch your mindset to that, I guarantee it's going to fucking boost your trading, because if you're always trying to hold on to that risk and really minimize it, you're not really a trader. You're just trying to get the best of both worlds. You have to be able to take risk in this game. You have to be able to accept risk. It's just part of it.
And Nico, sorry, what are those big blue bullish candles there as well then? Are they high volume candles? Is that smart money going up?
Absolutely. Think about what smart money want to do. They want to trap the average guy into thinking that that's a breakout.
Yep.
This here is all liquidity being built up so they can build positions and dump price. That's what I think of the market anyway. Like I said, I don't know smart money. I don't know who they were. If I did, I'd be fucking a billionaire. That's the thesis of it. Look how strong price comes in before it dumps away. Like imagine you guys didn't understand it. Imagine you didn't understand this concept. You guys would think that the fucking bear market's over here. You know what I mean? At that point. But that's just a big game that they want to play to move prices lower.
So even the 1, 2 to the right there, go 2 to the right there. You'll see next one across. Next one. That one there. So that's a big 3, was it 4 hour candles? Or it's a 3 hour bullish.
That's wait, is that live price now? Oh, I'm in replay mode still. Sorry.
No, you're in replay,
Yeah, okay. Let me get it for you. I know exactly what you're talking about. So we'll go back to the 1 hour where we were. You're talking about this move here?
Looks different on the
I think I already spoke to Chris about this. I did the video for him yesterday. So you had your base here, right? We'll just say there. That's the overall sort of demand being built, right? So we're basing, we mark up, right? That's the break in structure. So this is structure. All right. And then Chris was entering on the support level. Okay, but he wasn't taking into consideration that this overall level here is a great area of demand. Does that sort of make sense? So like you don't really want to and if we pull a fib, I don't know where it is, but we're still around that 70% retracement. So you don't want to have your stops. Let's just say you went long on that support there, or what the average guy would think. Their stop losses are going to be here. That's how the average retail trader trades. They put their stops really tight and they buy on support. Okay. But when price comes into discounted prices, that's our entry. You got to think of what demand is, right? It's drop, base, rally. Okay. And when we come back, that's the area we're looking to buy. And then we see, and then that's the level there.
Right.
And you got to remember that whole level. I'm using the 8 hour a lot, guys. Give it a go. You'll like it. That whole level that we just looked at on the 1 hour was inside the overall 8 hour. And then we had the order block there. So it's coming back into it, even inside this larger one here. That's the 8 hour demand. Okay. Price bases on it, rallies, comes back to the origin, which is that little down candle here. Right there. Okay. People would have been going short there. There would have been heaps of shorts stacking up, thinking, fuck, we're going to break. Price moves, comes back. You get an easy 3-1 there. All right. But one thing we got to understand is that we're still like this for me, even though prices come into it a lot here, we're not using this. I can't look at this as a short position right here, right now, because look how many times that price, like there's been so much time spent at the level. If it was really a good fresh order block, we would have already had a reaction down. So you don't want to take shorts off used levels. We can see here, even on this supply, that's been used with the wick that already came in. We already got the move off that level. So like really the only fresh level we have is up here. You know what I mean? Or up here. So I don't know what price is going to do. That's why I'm not taking longs right now. So you definitely can't take longs. But what I've seen with like the structure is like, we can see here, we get this sort of range. It fakes out above and then it comes down. So we could get something very similar where price does this. You know, it comes up to the top of the range. Let's just say this, you know, it comes up to the top of the range. Imagine how many people would be buying here when that resistance level breaks. You know, you get a fake out and then just, you know what I mean? So just try get your mindset of like, whatever the average bloke's doing down that's gambling, just try switch it. Do complete opposite. That's really the best advice I can give you guys. Has this been of good help?
Yeah, fuck yeah.
Oh yeah.
Yeah.
All right.
Yeah, defo.
Well, like, I know a lot of you wouldn't be tracking your trades and just taking screenshots, but please do it. Like, I know it's a fucking nuisance. You don't want to screenshot every trade, but it's going to make you guys better. So take it or leave it. But
I think just typing it in on the computer, it just makes you think about it more too.
Yeah, 100%. 100%. And me and Dan need data. We need to see where you guys are potentially struggling so we can make more content, because you know, I'm sitting here, I'm only seeing good results in the group. So I'm sort of like, fuck, it's all working. But I know a few of you guys are quiet. If you're quiet and you need help, just hit us up. We'll make some modules. I can do content every day. You know what I mean? So just let me know.
Hey, Nick, what's your theory on, you know, when it dives into an order block and it goes into 25%, 50%?
Yeah.
If it just spikes in at the 25, is that order block, is it less likely to be mitigated, or do you reckon it'll just, next time it goes in, it gets to 50, it's going to be weaker?
So the 50% entry for me on an order block, sometimes I miss the best order blocks because I'm too generous with how discounted I want it.
Yeah.
Essentially, it's not a rule that smart money traders use. I personally came up with the 50% just to give you guys like something to be like, that's where I'm entering. Some order blocks, like for example, on this 8 hour, I don't think that even hit the 50% to the T. That's why I missed the trade.
Yeah.
So remember, sometimes not every order block, not every price will come into the 50. And I know it sucks, but until you guys get experience with entering on the 50, don't come any cheaper.
Yeah, because that gold shot I missed last night, I think I went to the 25, thinking I'll definitely get in there, and it's still, it must have spiders on it.
Me and Dan were looking at that a day ago. There it is.
Yeah. Just like, melted, didn't even get into it.
If I think about it, I could have taken the whole fucking wick and it would have been 50. You know what I mean?
Yeah.
So it's one of those things that like, you're not going to get the trade right every time, guys. I still don't get it right every time. I make mistakes all the time. It's about just being right more than you're wrong.
Yeah.
All right. I think that's pretty good. Any questions?
No, that's great.
That's gold.
I'll chuck that up on YouTube now, guys. All right.
Yeah.
And if you're someone new here who hasn't done order blocks, you have to go into either Onyx 3.0 or Onyx Crypto, which I'll be releasing to the inner circle soon. But you guys won't need to go through all like the basic support and resistance and market structure. The reason I taught you guys retail methods first is because you have to know how the retail trader trades to actually
I think-
understand this, to understand this stuff. You can't just take someone straight to smart money. I don't think it works. So you guys you probably don't even need a course. You just need more action and time on the screens.
Yeah.
All right. So keep at it. Dan, do you have anything to say?
Just be careful picking your order blocks.
Yeah.
Sometimes you will notice an order block and it might look perfect on the screen, but you'll see a little wick that's already happened next to it. Pretty much invalidates it.
100%. 100%.
So, and then
it's like this, Dan. I've got one here. Let's just say this was bullish structure, right? Let's just say you had demand here. Price came up. That wick there would invalidate it. Is that what you're saying, Dan?
pretty much.
Yeah. So when price comes into it, you can see it just drifts.
So just be careful and
Yeah.
So like go back to BCT, go back to like your description, for example. Go back to one of the slides.
Like that there?
No, go to like the higher time frame. I'll show the one.
Here?
Yeah.
Here's the thing about the mitigation. All right.
You had one perfectly before. It was somewhere before that, yeah. And it was like a little wick into it, and it pretty much invalidates it. They do it quickly so you don't notice.
Yeah, I find that a lot on the smaller time frames. If you trade a 15 and there's a wick into it, it's crashed, it's gone. On the higher time frames, 8 hour, 4 hour, it tends to be a little bit better because the thesis is on the higher time frames, right? The smart money has more time to build orders. Think about on a 15-minute order block, price never stayed in one region for long. They can't just fill $100 million positions like that. They want to keep price there. That's why you get those bases. So on a higher time frame like this, a little wick, they wouldn't be able to take all those positions out. So just remember the higher time frame, if you have a little wick into it and it's not too deep, you can still take it, for example. But on a 15-minute, if you get a wick into it, I just stay away from it, guys. All right.
Just a question, Nick. You know, when you doing a setup, do you routinely go 1 week, 1 day, 8 hour?
Nah. So one of the things I've learned is that once I understand where price is, so for example, right, because I look at the charts a lot and I look at it all day, I know already that we're on this weekly level. Do you know what I mean? So I wouldn't have to draw it out every day. Mm-hmm. Like if you're on the charts enough, you'll know sort of what price has been doing. When you come onto a new pair, for example, if I went onto like Matic that I don't really trade much, yes, I would start from like a weekly and I'd find key levels. But if it's something I'm trading every day, like Bitcoin, I already sort of know where price is and what it wants to do. And you guys will find that the more you trade one pair, the easier your trading comes. Like at the moment, the reason I'm trading Bitcoin only, guys, is because the alts are sort of starting to lose volume because we're in a bear market. In a bull market, mate, you'll be able to find fucking 20-to-1 trades on any pair. But at the moment, I think the cleanest price action is on Bitcoin and Ethereum. Okay, so just remember that. Does that make sense?
Yeah.
Yes.
Yeah.
Thank you.
All good, guys. So if you're seeing price here coming up long and you want to take longs, don't do it yet until we're breaking these highs. But even if we break these highs, remember we could easily dump. So I just don't think you guys should be looking for longs. Just chill on it. All right.
Very good.
Cool.
Yeah,
I'll upload this now.
Thank you.
Thanks, team.
Thank you.
Fantastic.
Cheers, guys.
See you guys.
Thank you.
Thank you.
Cheers, bro.
Okay, thank you.